In just the first few months of this year, the dollar has lost ground, significantly, to nearly every major currency. The euro, the yen, the Swiss franc, even the Taiwan new dollar. This isn't currency fluctuation, this is coordinated pressure. Something structural is happening. It turns out that the current administration, like previous ones, sees the strong dollar as a double-edged sword. Sure, it gives the US purchasing power abroad, but it also makes American products expensive, suppresses manufacturing jobs, and fuels record trade deficits. And now there is an intentional shift underway. Weaken the dollar to stimulate domestic industry. New tariffs on imported goods are not just about trade, they're about currency. By slowing global trade, Washington is chipping away at the global demand for the dollar. If less business is being done internationally, fewer institutions need to hold USD. History reminds us that no reserve currency reigns forever. The Dutch guilder gave way to the British pound, the pound gave way to the US dollar, and while no clear successor has emerged just yet, this cycle of change is natural, and for investors it can be incredibly profitable. Neither the euro nor the Chinese yuan are ready to take the crown. Europe's too politically fragmented and China is too unpredictable. But here's what's getting attention: real assets, things you can't print or manipulate easily. Gold, commodities, and yes, Bitcoin. Assets that act as safe harbors when currencies start to drift. In times of currency transition, wealth doesn't vanish, it moves. It flows from paper promises to tangible stores of value, from centralized risk to decentralized safety. If the dollar continues to slide, expect long-term tailwinds for gold, crypto, and select foreign equities. Watch bond yields, watch central bank reserves, watch cross-border capital flows, and most importantly, don't wait until the shift is mainstream. By the time it hits the front page, the opportunity will be behind you. When all is said and done, the US dollar is backed by nothing but paper. The government prints money, proceeds to buy treasury bonds with said money, to back said money, and then this money is placed into circulation. It is a bubble that will inevitably burst. We're tracking this story as it unfolds and how investors can capitalize. If you want weekly insights, trade setups, and macro breakdowns in plain English, hit subscribe and follow along. The dollar story is changing, and so should your strategy.